In 2018, a shipping terminal in Los Angeles was sold for around $850 million.
Right.
And then just 3 years later, in 2021, that exact same terminal sold for $2.3 billion.
It just, almost a threefold increase.
Exactly. And the crazy thing is they didn't dredge deeper channels or anything. They didn't pour new concrete. They didn't buy bigger cranes.
No, they just applied a very specific, almost alien type of mathematics to their daily truck schedules.
Yeah, and today we're looking at the company that basically owns that math. Welcome to the deep dive. We've gathered a massive stack of financial reports, analyst coverage, and technical white papers specifically for you today.
And we are focusing entirely on D-Wave Quantum Inc.
Right, ticker symbol QBTS.
Yeah.
As of today, March 11, 2026, the stock is sitting right around $18.88. And our mission today is to figure out if D-Wave is, a brilliant world-changing investment hiding in plain sight, or
a highly speculative trap for retail investors.
Yeah,
Because it is one of the most polarizing setups in the market right now. I mean, the signals coming from the deep tech community and the financial community are just completely contradictory.
Okay, let's unpack this. Because when you read through these sources, you get severe financial whiplash.
Oh, absolutely.
On the technology side, D-Wave just reported a year of massive leaps, alongside this jaw-dropping 179% annual revenue increase for 2025.
Right. But then on the trading side,
The stock recently dipped. They completely missed their Q4 earnings expectations. So you've got some Wall Street analysts aggressively telling investors to sell, while others are predicting the stock price is about to double.
yeah, and to even begin judging that stock price or, making sense of those chaotic financials, we have to look under the hood at what D-Wave is actually selling.
Right.
We really cannot think of this as just a faster version of the silicon microchips inside your laptop.
No, quantum computing is, especially the way D-Wave approaches it, it operates on an entirely different plane of physics.
Yeah.
So let's define their business moat first, because the sources emphasize that D-Wave has this dual platform advantage.
Yeah, they are currently the only company in the world building and offering both annealing quantum computers and gate model quantum computers.
And that distinction is basically the entire foundation of their business model, right?
It is, because if you look at the broader quantum landscape, almost every major player is chasing the gate model computer,
That's Holy Grail.
right? The Holy Grail.
Uh.
It's designed to run highly complex sequential algorithms, things like simulating complex new molecular structures for pharmaceutical drugs.
Or eventually cracking modern cryptography.
Exactly. But gate model systems are notoriously fragile. They're highly susceptible to what we call noise.
And let's clarify what noise means in a quantum context for you listening, because we aren't talking about acoustic sound here.
No.
We're talking about microscopic environmental interference, right? Like a fraction of a degree in temperature change, or stray electromagnetic radiation.
That is precisely the issue. Qubits, which are the basic units of quantum information, they need to maintain this delicate state called superposition.
Where they represent both a 1 and a 0 simultaneously.
Right. And even the slightest environmental interference collapses that state and corrupts the math, which, makes gate model incredibly powerful, but currently very hard to commercialize reliably.
Which perfectly explains why D-Wave's second platform, quantum annealing, is their current commercial spearhead.
Oh, annealing is a completely different beast. It's highly specialized and built for one specific task, which is optimization.
Right.
It exists to find the absolute most efficient path out of millions or billions or even trillions of possibilities. And the key difference is that quantum annealing is stable enough for commercial enterprise use today.
It isn't just a lab experiment anymore.
Exactly.
I want to try an analogy here to see if we can visualize the difference for the listener. So imagine you manage a logistics company, and you're trying to find the absolute best route for 1,000 delivery trucks across a major city.
Factoring in traffic, construction, all of that.
Right, all the delivery windows. So a classical supercomputer tries to solve this by calculating routes one after another. It does this incredibly fast, maybe millions of routes a second, but it is still sequential.
It's essentially brute forcing the problem.
Exactly. It checks a route, scores it, discards it, and moves to the next.
But a quantum annealing computer doesn't do that. It doesn't check routes sequentially at all.
It maps the whole problem, right?
Yeah, it maps the entire problem onto a quantum landscape, considering every possible combination simultaneously. It then allows the system to naturally settle into the lowest possible energy state.
And that lowest energy state automatically represents the mathematically optimal route.
Exactly.
Yeah.
It finds the answer almost instantly without having to check all the wrong answers first.
That's just wild to think about.
That's a brilliant way to conceptualize it. It uses the physical laws of nature to just, settle into the solution. And D-Wave recently launched the commercial availability their Advantage 2 system, which pushes this capability to a new extreme.
Over 4,400 qubits.
Yeah. But more importantly, they engineered a 75% reduction in that environmental noise we just talked about,
Wow.
along with a 40% increase in energy scale.
Meaning the system can hold on to way more complex variables at once without the calculation just falling apart.
Exactly.
But the sources show they aren't abandoning the fragile gate model side either, which is interesting. D-Wave recently acquired a company called Quantum Circuits.
Yes.
And this acquisition gives them access to something called dual rail qubits with erasure detection.
What's fascinating here is how this attacks the core vulnerability of gate model computing. Because in a standard quantum system, if a stray piece of radiation flips a qubit's state by accident, the system doesn't necessarily know a mistake just happened.
It just continues calculating with corrupted data.
Right. It's like having a typo introduced into the middle of a massive mathematical proof. If you don't know the typo is there, the final answer is completely useless.
So this erasure detection basically acts as a proofreader.
It acts as an active alarm system. Quantum Circuits technology detects 90% of those random errors the moment they happen.
Oh, wow.
It flags the specific qubit and tells the system, hey, this piece of data has been compromised.
So by turning an unknown error into a known error, the system can actually correct for it mathematically.
Yes, and the reports indicate this pushes their gate fidelities to 99.9%. They are driving the error rates down to a threshold where gate model commercialization actually becomes a tangible reality.
I want to tie this abstract physics back to hard dollars, though, which brings us back to the Port of Los Angeles.
A great example.
Because that $2.3 billion valuation we talked about wasn't based on theoretical gate fidelities. It was a real-world deployment of D-Wave's annealing technology.
Right, a technology firm called SavantX was brought in to optimize Pier 300. They built this platform called the HONE engine.
Standing for Hyper-Optimized Nodal Efficiency.
Yes, powered entirely by D-Wave's quantum system. They created a complete digital twin of the shipping terminal, focusing specifically on the RTG yard.
And for context, the RTG yard is where those massive, towering, rubber-tired gantry cranes pick up shipping containers and load them onto the backs of individual semi-trucks.
Yeah.
And the structural problem at any port is that containers are stacked somewhat randomly based on when ships unload them.
Which is a nightmare.
Right. A truck driver might show up, only to find their specific container is buried under 4 other containers. So the driver sits there idling for hours while the crane slowly digs it out.
It is a massive bottleneck. And the classical solution is to try and schedule the trucks better. But as soon as you have more than 3 or 4 trucks assigned to a single crane, you run into what mathematicians call a combinatorial explosion.
Because the number of possible scheduling sequences just scales exponentially.
Exactly. If you have just 10 trucks, there are millions of possible ways to schedule them. If you have 15 trucks, there are over 1 trillion possible combinations. A classical computer simply chokes on that math in real time.
But the D-Wave system didn't. Instead of bringing the crane to the truck, the HONE engine used quantum annealing to look at the exact location of every container.
Right.
And it mathematically scheduled the trucks to arrive based on the exact moment the crane naturally had access to their payload.
And the efficiency gains were astonishing. The daily travel distance for those massive cranes dropped from 8,900 meters down to 6,200 meters.
It's huge.
The deliveries per crane jumped by over 60%, and the actual wait time for the truck drivers dropped by 8 full minutes per load.
And when a terminal is processing millions of shipping containers a year, shaving off 8 minutes of idle truck time per container literally creates billions of dollars in enterprise value.
Which explains the valuation jump.
Hence, the terminal jumping from an $850 million asset to a $2.3 billion asset in 3 years.
It is the ultimate proof of concept. Quantum optimization is no longer a science fair project. It is a live commercial tool, generating just staggering return on investment.
I have to stop you there, though. Let's look at the financial reports. Because we just spent 10 minutes talking about a technology that creates billions of dollars in real-world value. We established they have a monopoly on dual platform systems.
Right.
Yet when I look at D-Wave's Q4 2025 earnings report, the numbers are brutal.
They certainly caused a reaction in the market.
I mean, in Q4, their actual revenue was just $2.75 million, entirely missing the analyst expectation of $3.74 million.
Yeah, that was a miss.
Even worse, they reported a net loss of $355 million for the year. That represents a negative net margin of over 1,400%.
It sounds bad.
So how do we reconcile this supposed technological supremacy with a company that looks like it is bleeding cash at an apocalyptic rate?
Well, you have to look at the actual accounting mechanics of that $355 million net loss. It is incredibly misleading if you just read the headline.
How so?
That is not $355 million of cash actually leaving D-Wave's bank account to pay for servers and salaries.
Wait, so what exactly is making up that massive negative number on the balance sheet?
Out of that $355 million loss, $270.5 million was a strict non-cash accounting charge. It was related to the remeasurement of their warrant liability.
Okay, let's break down warrant liability for anyone who doesn't spend their weekends reading SEC filings.
Fair enough. When D-Wave went public, they did so through a special purpose acquisition company.
Which is essentially a shell company used to take a private business public.
Exactly. And to entice investors into that deal, SPACs often issue warrants. Think of a warrant as a legally binding coupon. It gives the investor the right to buy shares of D-Wave stock at a specific locked-in price in the future.
Okay, I follow the coupon analogy, but why does that create a $270 million loss?
Because strict accounting rules require companies to classify those outstanding warrants as a financial liability. And every single quarter, the company must update the value of that liability based on what the stock is currently trading at.
Wait, let me see if I have this right. If D-Wave's stock price goes up in the open market, those coupons become incredibly valuable to the investors holding them. Which means the liability D-Wave has to report on its balance sheet gets mathematically larger.
You nailed it. It is a massive accounting irony. Because D-Wave's underlying stock price appreciated so significantly over the course of 2025, the theoretical cost to eventually honor those warrants skyrocketed.
That's crazy.
That $270.5 million charge is a direct mathematical penalty for their stock performing too well. It does not impact their actual cash flow, their burn rate, or their daily operations in any way whatsoever.
That entirely shifts how you have to read their financial health.
It really does. When you strip away that non-cash accounting noise, the underlying business metrics tell a very different story.
Like the revenue growth.
Yeah. Their total revenue for 2025 was $24.6 million, representing a 179% increase from the previous year. Their gross margins are incredibly healthy, hitting 82.6%.
Wow.
And perhaps the most vital metric for any deep tech growth company. They ended 2025 sitting on a record $884.5 million in cash and marketable securities.
Nearly $1 billion in pure liquidity. So they are definitely not at risk of the lights going out anytime soon.
Not at all.
The obvious question then becomes, where are they deploying that war chest? And who are they fighting against to capture the market?
Well, to see the momentum, we have to look past the trailing Q4 miss and look at their forward order book. The leading indicators are highly aggressive.
The January 2026 bookings data in the sources is wild. In just the month of January alone, they booked over $30 million in business.
Yeah.
That is more than they generated in all of 2025 combined. They sold a $20 million system to Florida Atlantic University, secured a €10 million deal for a new facility in Italy, and signed a massive $10 million two-year agreement with an unnamed Fortune 100 company for quantum computing as a service, or QCS.
And the Fortune 100 deal is the critical signal there. It demonstrates that the world's largest enterprises are moving past the experimental pilot phase.
They're locking it in.
Exactly. They are now baking continuous quantum access into their multi-year operational budgets.
Here's where it gets really interesting, though. D-Wave isn't operating in a vacuum, and their competitors are heavily capitalized, too.
Oh, absolutely.
IonQ, one of their primary rivals, just became the first pure-play quantum company to cross $100 million in GAAP revenue.
And GAAP revenue means that is standardized, officially recognized income.
Right, not just future bookings. IonQ also secured massive ISO certifications for environmental management and information security, proving they're ready for enterprise deployment.
We also have to look at Rigetti Computing. They recently secured an $8.4 million order to deliver a 108-qubit system directly to India's CDC.
which is the premier research and development arm for India's Ministry of Electronics and Information Technology.
Exactly.
And the fact that India's government is buying this hardware really shifts this entire conversation. We aren't just talking about enterprise logistics or pharmaceutical research anymore. We are talking about a sovereign arms race.
Right.
You don't buy a 108-quoted system just to route delivery trucks.
The ability to process infinitely complex variables instantly is now a foundational matter of national security. And in direct response to this global shift, D-Wave just launched a dedicated U.S. government business unit, bringing in a 25-year defense industry veteran to lead it.
The sources gave us a very specific and frankly sobering example of what that defense unit is actually building. D-Wave partnered with Davidson Technologies and Endural Industries to work on next-generation missile defense.
Yes.
They ran a simulation defending against a 500 missile attack.
Think about the combinatorial explosion we discussed with the port cranes, but apply it to ballistics.
Okay.
You have 500 incoming projectiles. They all have different trajectories, different atmospheric speeds, and different targets.
Yeah.
You have to instantly calculate the absolute optimal launch sequence, timing, and interception paths for your own defense grid to stop them.
Right.
A classical supercomputer simply freezes up trying to sort through billions of permutations in a matter of seconds.
But in this simulation, they use D-Wave's Stride hybrid solver, which pairs classical computing with quantum annealing.
And the result?
The result was a time to solution that was 10 times faster than classical computers alone. And because the quantum system calculated a far more optimal defensive web, they successfully intercepted 45 to 60 additional missiles compared to the classical defense system.
50 extra ballistic missiles intercepted simply because the math was faster and vastly superior.
It's terrifying, but amazing.
It becomes incredibly obvious why the Department of Defense is highly motivated to integrate this technology. It is a literal life-or-death optimization problem.
So let's tally this up. We have a company with world-changing technology. They have an undeniable use case in logistics, a massive foothold in the global defense sector, and nearly $1 billion in cash.
Yeah.
But we also have an incredibly volatile balance sheet, missed quarterly revenue targets, and a stock price that swings wildly based on accounting quirks. So what is Wall Street actually saying about QBTS at its current price of roughly $18.88?
The analyst community is divided, as you would expect with deep tech, though the consensus leans heavily in one direction. But we should examine both arguments.
I will take the bear case, because there are some glaring red flags in these reports.
Okay, let's hear them.
Recently, Zacks Investment Research downgraded QBTS to a strong sell. Wall Street Zen also dropped their rating to a sell, but the biggest red flag for anyone who tracks corporate governance is the insider selling.
The CEO's shares.
Yeah. In December, the CEO of D-Wave sold over 793,000 shares of his own stock. That is worth nearly $24 million, and it represented a 23% decrease in his total ownership.
Yeah, a CEO dumping a quarter of their holdings right before a Q4 earnings miss is certainly a terrible optic for retail investors.
Furthermore, bears point to the valuation. The company's forward price-to-sales ratio is sitting at a staggering 138.
That's high.
Extremely high. To put that in perspective, a healthy, wildly successful tech company might trade at a price-to-sales ratio of 5 or maybe 10. A ratio of 138 essentially means investors are paying for 138 years of current sales upfront. The stock is priced for absolute, flawless perfection years into the future. Skeptics argue the company will inevitably burn through cash and dilute current shareholders by issuing more stock just to survive.
Those are highly valid concerns, especially regarding the valuation multiple. But let me counter with the bull case, which still represents the overwhelming majority of institutional sentiment.
Okay.
Out of the 16 major analysts covering D-Wave, 14 currently rate the stock a buy.
14 out of 16 analysts screaming buy on a stock with a 138 price-to-sales ratio is a fascinating contradiction.
It is, and their average price target sits at $36.50, which is nearly double the current trading price.
Wow.
Some specialized firms like Jefferies and Canaccord have targets set as high as $43 to $45 a share. And while the CEO may have taken some chips off the table, the SEC filings show that massive institutional investors are stepping in to buy.
Really?
Yeah, firms like Root Financial and Eversource massively increased their holdings by hundreds of percent just in the last quarter. The big money is accumulating.
So the retail analysts are getting nervous about the trailing revenue numbers while the institutional whales are buying up the float. Why the disconnect?
If we connect this to the bigger picture, it comes down to how you value a monopoly in transition. D-Wave is currently pivoting out of a massive, decade-long research and development phase and moving aggressively into commercial adoption.
Which that $30 million in January bookings proves.
Exactly. The commercial transition is happening right now. Bulls argue that penalizing D-Wave for a high price-to-sales ratio today is like penalizing a pharmaceutical company for a lack of sales, while their blockbuster cure-all drug is in the final stages of FDA trials.
Ah, I see.
The true value of the company isn't based on what they sold yesterday. It is based on the technological monopoly they are poised to hold tomorrow.
So what does this all mean for you? Let's summarize the landscape. D-Wave Quantum is the absolute definition of a high-risk, high-reward play.
Without a doubt.
They possess a unique dual-platform moat, offering both annealing and gate model quantum computers. They are flush with nearly $1 billion in cash, and they are signing undeniable multi-million-dollar deals in defense, global logistics, and academia.
Yes.
But they trade at a sky-high valuation. They operate in an incredibly complex and fragile technological field, and the broader stock market is still struggling to figure out how to accurately price quantum adoption. It is an investment that requires immense patience and an iron stomach for volatility.
I completely agree. And I want to leave you with a final thought to mull over on your own as you look at this sector.
Okay.
When we analyze companies like D-Wave, IonQ, or Rigetti, we have a terrible habit of evaluating them like traditional tech hardware vendors.
Like they're just selling laptops.
Right. We obsess over unit sales, profit margins, and price-to-earnings ratios. But think back to the Port of Los Angeles. A single quantum optimization run helped turn an $850 million physical asset into a $2.3 billion asset without pouring a single ounce of concrete. The true value wasn't in the quantum hardware itself. The value was the billions of dollars of invisible friction it permanently removed from the supply chain.
That completely flips the valuation model on its head.
Exactly. Perhaps we shouldn't be valuing quantum computing companies simply by how many servers they ship or how many cloud subscriptions they book. Instead, this raises an important question. Should we be pricing them as the ultimate silent equity partners in every future trillion-dollar industry?
Oh, wow.
Because if quantum is the master key to unlocking hidden efficiency across global logistics, pharmaceutical development, and sovereign defense, whoever holds the patents to that math essentially owns a piece of everything.
From the container yards of Los Angeles to the orbital interception pads of a missile defense grid, the future belongs to whoever solves the math first. That is all for today's deep dive. We'll catch you next time.